Welcome, everybody. Here we are. And sorry, I didn't want to start the show too late. I'm just pulling my notes out for this episode. That's hilarious. Should be right. Most farm families don't fail because they didn't plan. They fail because they didn't have the cash at the exact moment they needed it. Insurance is about, isn't about money. It's about giving your family options instead of deadlines. Set expectation today is not product pitch, it's a decision framework. So let's get on with the show. See, I have two cameras, pictures showing. Oh, look at that. We're hosting on both sides of the story. Let me just see which ones I gotta take out. Here we go. Okay. I hope this one comes in. Microphone is fully hearable. Hi, man. Technical difficulty. My computer is not updating. This is the beauty of being live on the show and preparing 2 minutes before, because you know it out there. Life is getting super busy, and we're just trying to make a living here on this planet. And sure, folks, you have tuned in Farmers in Finance. Welcome back. Episode 31. Wow. We're coming a long way from the usual Rico. So a little bit about me. This show is about real stories and smart monies from the field and beyond. As a little bit of a history and a background on me, I'm a former farmer. I farmed for 10 years in the beautiful South Okanagan, a little place called Oliver, BC. I used to have a 7.5 acre farm. I never said that to the show, actually. It was so-called in the area of the beautiful grapes and wine country. And little story, when I moved first there was a big, huge slide that had happened because there was flooding. And as we speak today, I'm out of the Headley. It's raining. Wow, we welcome the rain. Even though it's one of those events that when I was taking my kids to school, they're just like, oh my God, it's raining. We're not used to it, right? Like rain it doesn't happen too often here in the South Okanagan, but it's great. It means less fires. It means a lot of less things and luscious green pastures, right? And I don't know if that ties in with today's episode, but I just want to do a recap of last week's. I know I put up the slides already, but last week we talked about trust and incorporation and what the two different options are there. And sometimes it's good to have a trust. And this is about succession, right? We talked about the issues, the problems, and even in the previous episode, we were talking about the common mistakes that farms make when it comes to successions, and where you need to have the proper plans that need to be in place. And then at the end of that show, that was episode 29. And episode 30th, we talked about the two possibilities that can keep your farm safe from, guess who? The government. And final disclaimer here, I am not against the government. I am for the people, and I want the government to have accountability for what they're doing and the decision making. Speaking of accountability, I wanted to talk about this because it's something that it's been on my mind. And if I don't speak it out here on the show, it's never going to come out. And I don't know whether you're listening today or you just started listening. This podcast is about financial freedom. That's why it's televised across my channels. And it's about creating a domain where everybody's free, not just myself or immediate others or other families, but that we can gain that freedom, not just financial, but life freedom. And lately, there's been a lot of issues, especially with how the government is operating and how our neighbors are starting wars with people and everything like that. And every time, I talk about it, but this one time, I just want to talk about what they're doing with the weather and the manipulation that they're being going on, because it seriously is affecting everything. And the plan is, and I have even talked to government officials, and they put this on the side, and it's called geoengineering, or some people call it chemtrails, because truly they're spraying chemicals to manipulate the weather. Whether you not believe it or not is still an issue out there. I was a farmer and I was out in the field every day, and since 2000, when I was in farming, my kid was born in 2010. So since 2010, I've observed the skies from going from blue, normal clouds to fully enveloped. So far that the other day, some guy, like, there was a listing that came up in Headley, and they took pictures with their drones of the sky and the house, obviously, and the sky was just covered in these lines. They're not clouds anymore. Okay, so I just want you to research this stuff, and it's called geoengineering. And if you haven't heard about it, please find out, because it's really affecting everybody and everything, and it goes from health, fires, like the intensity of fires, and weather manipulation. They can bring rain in certain spots, and then they can put rain in other places, right? So, I mean, it's not right, and it's not disclosed, right? So it's something that should be addressed, and in order to create freedom, we need to have understanding. I don't know if you can hear me out there. I just put my headphones. Where are they? Just gotta see. That's one thing first. Hello? Oh yeah. Yeah, we're still working. Okay. Yeah, again, I'm having problems. I'm showing from two computers because one computer can't show the videos. I don't know. I'm having updates, but anyways, let's get back with it. Okay, so last week, yeah, we talked about trusts, and please, you can follow all episodes. I have other farmersinfinance.com is my website. So you can pop on there and watch full episodes. They're on Spotify and Apple Podcasts, so you can even listen to them in the car. Appreciate it if you subscribed. That helps my channel grow and also spread the word. if it needs to be spread, it's up to you. That's why these are free to watch. And right now we're casting on Facebook, LinkedIn, and YouTube. So on LinkedIn, you can find me under my name. It's pretty easy. Actually, not Rico Manazza, but you can find me under Ricardo Manazza. But oh wow, okay, perfect. That's exactly what we needed. My computer here now is saying that I'm running out of battery, so I'm gonna start talking. What are we gonna talk about this show? Okay. Well, this show is about liquidity, and the succession planning needs to have cash. Every time, everything that happens in death needs cash in order to back up um, whatever it is that you're succeeding, right? Like last week we were talking about the trust and how that protects from taxation, or the incorporation, how that protects from taxation, the two different tax levels that happen. And this week's, that's why I followed up with this week's episode, which is about liquidity, cash. And how do you find liquidity at death? Is either you can find it in two ways. You either save money and you put it in an investment, which is easily accessible. But if you did that, it still gets locked up under the name of the person of the funds are saved. So even there, you have to think about something different. So you can either put it in segregated funds, which I will explain in a second, or you can put it in an investment account, which can be, some people are taught to invest in RSPs. But again, RSPs, if they don't have a succession plan or a beneficiary, then they get locked into the estate, and then you pay at death, you pay the full amount, and it's whatever is left in the RSP. Say you have 500 grand left in the RSPs because you saved up for your retirement and you passed away earlier, then that amount gets a full-on tax year, and it usually sits at 40 to 48% tax rate, which means half of your money that belongs to your family is gone. Like, this is not, I want to say this. The game is rigged, folks. We are in the Monopoly game. I don't know if you've ever played the Monopoly game out there, but this is what it is. It's a Monopoly game where the government and higher ups, powers to be, let's call them, own the board. They probably have left you, remember the cheapest zones? They probably have left you that in the game. So how do we navigate that? Well, it's about coming together, understanding the rules that they have created, right? And knowing your true powers, right? Like, and I mean in the pen, the power of the pen, and in the power of sovereignty, and the power of legislation, and the power of contracts, because that goes well with this show as well. And so what am I going to talk about? I'm going in a tangent, and I don't want to go into tangents, but obviously I am speaking out of my heart, and I just wanted to get through to people, and hopefully we can come together. And please reach out if you want to discuss this more. But let's go to the show. First, what liquidity means and why timing kills plans. Second, the three events that create the invoice day. And third, how life, disability, and critical illness each solve different problems. Fourth, a simple way to pick up a coverage number. And finally, the big mistakes and a 7-question action checklist. So it's a pretty filled show, and we're already 15 minutes in. So let's go to the quote of the day. I have two. Um, Regularly, I put this on the show. I do a lot of quotes of the day, so that gets a little bit of the foundation started. And today I am picking two because when I put this in AI, it started doing it on its own. I was like, can you pick for me five quotes, and I'll pick one, right? And then it goes ahead and misunderstood because obviously I had it prompted wrong, but it misunderstood. So it gave me five different quotes, and I've got them all here, but I'm just going to pick two of those. But then I asked them, hey, can you put the label on who the originator is? And then it said itself. So these are quotes created by my AI assets. Okay, so crisis best asset is time, and liquidity buys time. You need a plan that works on the worst day. Um, I just, like these are pretty intense, pretty connected with what we're going to talk about, and then it goes with everybody's life. Like I made this show for farmers because I was a farmer. I'm still a farmer. Like I'm still planting trees. I'm still doing irrigation systems in a smaller scale. Like you can call it small farming. It's just I'm just using the land a little bit more efficiently than I used to. And I don't have tractors. I do everything by hand. So I get close and in touch with my food, with the earth, and I ground, and I feel the benefits of being so close to the earth. But at the same time, I respect all farmers and what they do out there and how they keep us going. Without farmers, I say it all the time, without farmers, there would be no food. And without food, what would there be? Um, Chaos. Wow, I'm so cheerful today. Yeah, I guess that's what it means. But let's go back to the quote of the day. In a crisis, right? Um, and this is one of the main leverage point that we talk about when we talk about insurance is in a crisis. So in the event of either an injury, a disability, or death, um, the best asset is time. You know how they say, give it time and it'll pass away. That's pretty much what happens. But what else can buy you time? Liquidity. And having the proper insurance in place can buy you that time so that you can, like I said in other shows, grieve and celebrate, have a celebration of life for the one that passed away. And at the same time, the farm keeps on going. You don't have to sell the assets that are producing you the money. So, um, I'm looking at my slides and that just popped in my head. This is for educational purposes. I am a real estate agent here in the South Okanagan, and I offer advice in purchasing land and other assets. But this is not for financial or insurance advice, even though I'm licensed in insurance. I have to say this because every single situation is different and every individual needs is different. I am not giving you advice on how you should live, what you should do. This is just for education. So um, I just wanted to put that in because I don't want to get confused that, hey, Rico said that you could save money on this, right? Um, so there is many risks that come about with one's like what liquidity means. What do I mean when what do I mean with liquidity? Well, the liquidity means because there's different assets and they have, so meaning that if you needed the cash that is within the equity of your home, you either two things. You either put a mortgage or a line of credit, whatever, you put that on that assets, and that takes about 2 to 4 weeks to release that, but it's still a process which might take 4 weeks to years, meaning that to extract the cash, the energy, or the money that you need from that asset, it's a slow process, and that comes with real estate, right? So if you lock in, like for example, a GIC, usually they locked it in for a term, and depending on that term, it reduces your liquidity. The fastest liquidity now, it's cash on hand, right? Not cash in the bank, cash sitting under the mattress, right? So that's why farms are often asset rich. So they have assets like the tractor, they have assets like the land, the stocks, the barns, all these structures that are producing income, but they're not when you hit hope. So um, what what I mean by having fast liquidity when it comes to farming is, what's the invoice that comes about when somebody passes away, right? So you have to pay taxes, right, on the last day. And that's why we talked about last week. If you put everything in a trust or if you incorporate, there's a little bit lesser of a tax bracket. Transfer is a lot easier, so you don't have to pay the transfer tax either, right? But as an individual, you still get paying the taxes. You pay your last year of taxes in the last thing. If you have RSP accounts, those get liquidated. Make sure you have beneficiaries named in all your registered savings account. That's huge. And make sure to talk to me about segregated funds. Just a little side note here before we continue. A segregated fund, it's an investment covered by insurance. And that investment is released at the time of death, tax-free to the beneficiary. So you name a beneficiary, that fund is released. Okay, so the real risk off to the slides. No, actually, I'm going to finish up here the 5 examples. Legal and accounting costs. Those, we know what they are, probate fees here in Canada. And there's accounting fees because, everything, the books need to be put at even. And there's much more like, lawyers sending out notices and all that for the will and the reading and finding the will, blah, blah, blah. Debt payments, that don't pause, right? Probably the farm is under debt, right? So those will not stop. And if they stop, you lose the farm. You don't want to go into a foreclosure, right? Payroll or hired help. Farms usually have some sort of help, especially in the busy times. We used to employ a couple of people, and they do help. And so you don't want that to stop because that becomes an asset as well. And then equalization, paying out the siblings. So like we made the example last week that if one kid wants to farm and the other two want to go away, you need to find a way to balance that out and pay out the other kids. So again, liquidity is where it comes in. So there's not just one risk that comes that you can actually get protection and liquidity, which number one, obviously, like the slide says, the real risk isn't just death, it's early death, right? Because death is imminent, it comes to everybody, right? It's just we think we're invincible when we're young and we can do all these things, and that's why we take a lot of risks as we age and we experience death, not per se on our own, but other people die around us. It creates this reality that, you know, death is coming closer, and we all age, right? And we feel that, okay, death is coming. Death comes for everybody. There's that saying that I really don't like, but there's two certainties in life, deaths and taxes. But I don't understand why they put their taxes beside deaths. But anyways, that's just another blurt. Death creates immediate financial pressure. While banks and lawyers may slow down access to accounts and assets, right? Early death is what's not expected, right? We all hope to live a long, healthful, and pleasant life, but in situations, and we see it times and times again, whenever I say this and whenever I discuss this topic, I always think of GoFundMe pages. And who hasn't seen a GoFundMe page where it's asking for money because there's this unexpected death, right? Like, and most of the people act too late, you know, like, okay, yeah, now you're putting up a fund. You don't know how much liquidity you're going to get. You know, I mean, I love how people help in that department, but it costs pennies on dollars of protection, you know? Did you know that for $150,000, you can just pay $20 a month for insurance? Like, why not? You insure your car. Some people do. That's another thing, insurance. But we'll talk about that in a second. So death creates financial pressure, right? The farm still has obligation, of course. So if there is a key member that has died and it was like important for the farm to operate, you know, you lose just not just the knowledge that was gained throughout the person's life, but you also lose like the little techniques, the skills, the timing. Timing is so important, right? Like knowing what to do when, right? So all this stuff cannot be transferred over immediately, right? And that's what the problem with early death causes, right? Then there is event number 2, which is like really missed, but it happens, and especially to farmers, because farmers are exposed to high risk environments, right? Like even the little spraining of a knee or the twisting of an ankle, that causes a time delay, right? Like it causes problems, and then you can't work, and if you can't work, then production slows down, right? Again, it affects. So disability should not be ignored, and because this happens when you're alive, you know. Like I remember little plug here. I remember when I was on the farm, I got injured because I was stupid, and I tied a horse on my waist, and I was still, you know, like going around just trying to bond with the horse, but so that I was just bringing it around with me, and it got spooked, and I got tossed around like a little rag doll up and down the field, and I almost lost my life. But at that moment, I didn't die. I fortunately survived it, but I had the most agonizing. I had a huge gash in the back. I had, two broken ribs, and I was out. I couldn't do anything on the farm. So who took over, right? Like my wife did. And it was the worst time for her because we had young kids. She had to take care of the kids, take care of me, that I was heavily sedated and under a lot of pain, take care of the farm and the animals and feed them and collect the eggs and the sales and everything else, right? Like something out of the blue. One stupid little decisions took me out for, I was pretty fast at recuperating. Well, kind of gradually. Obviously, when you get injured, you sprain your ankle, maybe you can't walk for that day, and then slowly you get it back, but you're not 100%. And it took about a month to get back to where I could, manage all my duties. And again, this one is so missed because it happens when you are alive. So make sure that there is a plan. And again, it's not that expensive. You put it on your car. You spend more money on your car insurance than you spend on yourself and how to protect your assets and your family and your farm. Anyways, then there's the other mentioned and critical as well is the possibility of illness, right? And a lot of people don't see it possible happening to them, but more and more is starting to grow because uh, the statistics are not lying and the numbers are saying what they're saying. And two people out of, no, one person out of two people in Canada is projected to get cancer. I know it's a bad word. I don't think that happens a lot to farmers because they're more connected to their food, but still, it's a possibility because the more and more we start using chemicals and the more and more we digress with the level of activity by which we use tractors and everything like that, then the body cannot take the burden that you put it through. So, gotta have these in place. It's critical. If it's not through me, it's through somebody else. Just have the conversations. These are like insurance is like, oh, missing the pictures. I don't know if you could see this, but I guess the pictures didn't get transferred. Oh, that's too bad. It was a good presentation. Anyways, what? Okay. Okay. So it's important to have this liquidity. It's not talked about, and don't do it when the least amount of time you have, right? Like when you're pressed for it. And usually bad decisions come on in that state. Um, that's so funny. I'm taking a coaching course, and it says state before strategy. So you want to be in a self-regulated state, and you don't want to be in either a depressed state, which usually most of the times is when a death or a disability comes, is a depressed state because you don't act, you don't see a future or anything like that. Or sometimes you're in a panic mode, right? Like, and so you're excited and you can't actually function. So this big part about success coaching is saying state before strategy, and that was week 1. So I can't wait for the next few little while. I'm going to pass this on here. And yes, I am inspiring to be a coach as well. Any type of coach, success coach. I'm taking one of the best courses available out there, put on by Matt Ferry and Glenn Sanford. He's the CEO of EXP. So 2 great people, 2 high achieving people in this world. But let's continue on. Okay, so life insurance. Life insurance, it is liquidity that shows up first with certainty when someone dies. Pretty simple, right? It's cash. And most of the insurance companies pay within 2 weeks. And I tell you a little story. My dad died when I was 8. Again, it was an unexpected death. It was sudden. Sudden as to say, he got the symptoms. He had kidney cancer. And when he got diagnosed, it was just a simple, he was shoveling snow. Then he starts complaining about his back. And then he goes to the doctor. Doctor takes some tests, and they find out that he had cancer at the kidneys. One of his kidneys was completely blocked by the tumor, and so they removed it. But once they removed it, they got in there and they saw that it had spread to the bone. As anybody knows or maybe don't know, cancer to the bone takes you away pretty fast. So 9 months later, after the diagnosis, he died and left us with the debt of the house. He had a life insurance on his life, but in the contract, because contract are key, it was specified that if he died from a certain illness, which was cancer, he would not be covered. It was only covering accidental deaths, right? Not illness deaths. And as we saw it, as we grew up with this story in mind, I always was of the idea that insurance was a scam, right? And you talk to a lot of people. I mean, I talked to a lot of people about it as well. And a lot of people say it's a scam. But that's because they just hear the bad stories, right? And the bad stories travel faster than the good stories, right? But when I joined my first insurance broker, I started hearing of the good stories. And the good stories, let me tell you, they beat the bad stories 100%. And then it started to make more and more sense, like why we have insurance. It's just like protecting the liability. So with this in mind, I understood that it's all about the contract. It's all about the protection. And we said it before in earlier shows, is that what insurance does is it's a way that people have created this tool in order to help each other with their final product or final arrival. Like the first places where we saw insurance was in delivery of goods. So they would spread the shipments over 10, 15 ships. And then whichever ship, because it was a high risk crossing, right? Like either in the Atlantic or in the Pacific Ocean, the ship at the times, they didn't have the structures that they have now. So if they were caught in a storm, some of them would not make it. And so in order for the merchants to protect their products, they would all pull in their money ahead, and they would insure their shipments. So if one shipment didn't arrive, the company didn't go bankrupt. They were covered by the other shipment companies. So that's why it creates. So insurance, what it does, it creates a pool of money. And that pool of money is used by the insurance company to create more money and generate that money so that they can pay out their policies when they're getting claimed. And life insurance, if it's a good contract, it always pays out because death is inevitable, right? So at one point it will pay out, and that's how they base their premiums. They have calculations out there, right? That's a little bit of insurance 101. So there's 4 roles that I put together that go to, and you can see the slides. There's 4 roles that the insurance has that will cover once at death, right? So number 1 is you keep the farm running. So you can replace the income of people, you can pay for the labor, you can pay for management, and you have time to stabilize the operation. So that means you find a replacement for one of the key operators, right? Role number 2, you pay the state invoice, right? You got to pay the taxes, you got to pay the legal costs, you got to pay debt payments and all the other immediate bills. Number 3 is fairness, right? If you have it in plan, I mean, obviously every situation is different. So this will be the equalization check, meaning that our farmer friend here gets to keep the farm, and the other kids that don't want to farm, they're going to be paid out. And so they will not contest because they're getting paid out. The farm keeps going, and it creates stability, right? And this is a pretty big one. Role number 4 is fund a clean buyout, right? So if there is multiple partners or multiple owners, because that comes into place too. Maybe you have different investors, they can just buy each other out, right? And that succeeds the farm, and it creates, again, like, I don't want to repeat myself, but it's stability, right? Okay, so now the disability insurance. Oh, my slides got all put away. Okay, well, we'll talk about disability. Look at that. I got a picture of a farmer with a broken arm, and he's looking outside the window. If you're listening to this on Spotify. So yes, what happens if you get injured? Then you're just looking at your farm. Obviously, your mind can still be going. Depends on the level of insurance, but it can cost you more actually than life insurance, right? Because now you're most of the injuries. I don't know if you know about it. It's most of injuries happen when you're needed the most on the farm, right? It's not like my injury happened right when everything was sprouting. I still remember that there was like budding on the trees. So that was at the beginning of springtime. And what's there to do on the farm? Like my farm had planting, tilling, watering, setting up the water system, right? And all kinds of different things, so that if I got injured, boom, and without disability insurance, I wasn't covered. Like I have a couple of examples. What happens when you have a back injury during calving season? Not that I eat meats anymore, but that's really strenuous. Like you have 30 or 40 heads, right in the springtime, and who hasn't heard of people getting injured with machinery, right? Tractor incidents happen all the time. And if you survived it, it's causes you, right? And what if you're injured permanently, right? Like if you cut one of your fingers off or one of your toes and you're limping and now you can't have the same speed or anything like that. Like, you got to think of, I know it's troublesome, but it's so important to have the proper coverage, uh, and then also have like the proper contract in place, right? Like there's a few terms, as we can see on the slides, own occupation or versus any occupation. So what occupation are you covering, right? And we speak about farming, but it could be anything else, right? Like you could be a welder, you could be a contractor. You need to have the proper coverage, right? And be able to sustain, because disability usually doesn't pay the full income that you were expecting. It covers a portion of it. And especially farmers are not getting these products because they are taught to keep going, don't worry about it, you'll do fine. But when it happens, again, who pays? It's the families, the farms, and it's a major decline in production, right? Especially if it happens to people. So usually takes, even for this type of plans, takes some time to get into place, but it's still liquidity, it's still money that happens in the future, so that you can have a buffer, right? Like you can have buffering time in between, but usually it pays out and it helps keeping the income going as well. So now critical, oops, how do we do that? Critical illness, lump sum. Didn't even have a blurb about critical illness. Well, we all know what a critical illness is, and like I was saying, it's about creating a lump sum. So what happens when you're diagnosed with cancer or heart attack or stroke? These are the three major coverages that you can get. And for farm use, you can use this to pay down the operating debt, right? Hire temporary help or protect the cash flow during the treatment, right? Because we all know that it takes time to heal from these diseases, and there's different tools that you can use. So instead of like working and, let's say, going to chemo treatment, you can take a break from the work part. Obviously, I still recommend to still get exercise whenever you can. You need to stimulate your muscles, but still, if you can't work, it does buy you, flexibility, right? And again, to get, and this pays in a lump sum. So whatever the coverage is, you survive for 30 days, and after the 30 days, you get a lump sum cash buyout, tax-free as well, right? So, and that, with what you do with that, it's has to be planned, but most best uses are you can pay down the debt so that your monthly payments drops immediately, whatever that you have on. If you don't have that, you can fund hired labor management so the farm keeps on moving, or you can cover travel and family support so that you can focus on recovery and not the cash flow that your farm is requiring you to be there for. Disability is income over time. This is the difference between the two. Disability pays you an amount, a monthly amount over a course of the period. Obviously, that's all defined in the contract, but critical illness is just a one-time cash-in injection. So there are different tools for different problems, right? So now is about which one is good for you. I recommend to have them both. Sometimes there is life insurance products that are bundled in with disability products, or there's a combination of all three bundled up together. They're all different. This is why this is just educational purposes, and it's not per se for advice. I'm not giving you guys advice. I'm just saying this is just what it's for. Going back to insurance, because I see that one of my slides is missing. I want to talk about term versus permanent. Because I feel like each one has a little bit of advantage over the other. But then what I learned through my financial courses and teachings is that have a bit of both, combine them together. Man, they are such great tools and they offer such a relief. Like I said before, I was telling you the story about life insurance and how I did not believe in it. I always, for the life of me, I thought it was a scam until I became a financial associate, and it's one of the biggest tools that you could ever get. And it helps give you peace of mind. I mean, who out there hasn't seen a GoFundMe page about a family that lost their father or they lost their mother, and now they have to rebuild their life without that income, the presence, the work that is done by that person? Who hasn't heard of that, especially lately with all the vaccine injuries? Anyways, okay, don't want to take my shoe down. Okay. So with term insurance, I don't care what you buy, as long as the policy that you make or we make together matches the problem you want to solve, right? And I know maybe you don't even have a problem, and maybe I bring that problem to you, and then you're like, oh man, I don't want to listen to you, Rico. All you're bringing me is bad ideas. But like, it's better to have a plan, even if it's a messy one, than not having anything, right? And most of the time I tell my people, just get term insurance. So term insurance is you get insured for a specified term of your life, whether it be 10, 20, 30 years, and you have a set amount that you want to be paid out, and we can determine those amounts through a financial analysis based on your income, based on your assets, based on what you want to leave behind, education for your kids, and all these are taken into account to come up with the bundle, the cash that you need for your kids, your wife, your dog, your horses, whoever that you want to leave behind. You want the things that you love when you leave behind to be taken care of. Anybody does. Well, maybe not the psychopaths or anything like that, but everybody that wants to have a better life when they're gone for their hair. And that's why we work so hard. So term is probably the easiest, cheapest, and way to set it up, and it can cover and help out for pennies. Like I said, pennies on the dollar. Now there is also permanent insurance, and this is one of my best tools. I did not know about this, and I learned it again through financial becoming a financial associate. And permanent insurance is like the word says, it's permanent. You pay into it until a set time. Obviously, it's in the contract. You can pay until 65, you can pay until 55, you can pay into it 20 years, but it's permanent in the sense that it goes until you die, or until, most of them are like until you turn the age of 100, and then it actually pays it out to you. So for the people out there, there is a higher chance nowadays that we can make it to 100 and actually benefit from our own life insurance. Just a little plug out there, maybe just to get you into this product. But what permanent life insurance does, some of them, they can offer you living benefits. And I went into this last time a little bit more, and I'm probably going to go over it again in another show because this is crucial. It offers you living benefits. You can set up the so-called infinite banking system where your life insurance now is a huge asset. And especially when it comes to farming, this is another asset that offers you liquidity and cash. So it's not specific to that one person. You can have multiple policies. You can have as many policies as you want, as long as the life insurance approves it. But these become assets where you can borrow against, tax free. Boof. Big, huge concept, and I will expand later on. But obviously, the two have in place different options. And so there is strategies out there that you can layer them as well. So you can have 10, 20, 30 years, especially like, for example, if you have a mortgage, right? You can have a 20-year policy term that costs you maybe like $40, $50 a month. And then once that mortgage is finished over, you don't need that coverage. So it comes off your premium bills. And then all you need is the permanent coverage that you can set up, and your family is covered throughout the stages of life. And that is beautiful. I mean, that's the perfect setup, right? So that's a little plug and a little bit of the difference. I hope you understand. And also, I forgot to mention at the beginning of the show, if you're watching this like now or later, just leave a comment if something is unclear. I'm Italian, I make mistakes, maybe I don't talk straight. And if you want to know more and you're interested, you can just either send me an email. The email addresses are passing on by at the bottom of the screen. And if you're listening on podcast or Spotify, my email address, I can give it to you right now. It's rico@farmersinfinance.com. Okay, so how much coverage do you need? This is one of the biggest importance things to do when you get life insurance. Oh my God, it's 59 minutes. How much coverage do you need is you gotta identify your obligations. You gotta list everything that you will be paying or your family will be paying over the farm, which means the taxes, the legal accounting, the debt, the payroll, the operating runaway, and equalization payments, like to bring everything and put it into fair amounts, right? So that's step one. And then choose the runaway. I like 3 checkpoints. What do you need in 30 days? What do you need in 12 months? And what do you need in 3 years? So meaning that like if the kids are going to school, at what stage will they be needing coverage for completing school? Or if you have a tractor or an asset, how long have you spread that payment for? So on and so forth, right? Then you gotta identify, the income gap. How much time do you need to bring back operations to the level of income where it secures the farm? You gotta identify all the assets, what you want to get paid off in case of, and what can keep going, and it's paying itself off. Obviously, the more insurance you get, the more money it costs you in life. So there's like a very fine line in there. We're going over a little bit of the show. Stress test. Model it with high interest, like what we do in real estate as well. Is can you afford the payments if something was to happen, or if interest rates went up? And the stress test right now here in Canada is at 2%, right? Higher. And that's why the Canadian systems back in 2008 didn't fail as much as the American, because every single mortgage is stress tested. So they test your income. So if you can burden the higher interest rates, then you pass and they get approved. Pretty simple, but if you don't understand it, just give me a shout, call me, leave a comment, and I'll answer you. Your liquidity target is the amount that prevents forced decision and protects family relationships. Okay, so I'm just going to go. I hope that was clear how much coverage, but if you need to understand more, I offer free financial analysis, and we go through everything in detail: your credit card debts, your incomes, your assets, your car, your mortgage, your whatever, your pet bills, everything. And we put it down because there's nothing better than to see them on a piece of paper on the ground, and then we create the best plan, the one that suits you, suits your income. So again, a little plug: if you want a specific financial analysis done, reach out to me, give me a call anytime. It's free. It doesn't cost you anything. It just helps you understand what you need to do. And if it's not now, it's later. And I also help with setting up investment accounts as well to get you the most money out of your money. So I'm going to skip this slide. There's not enough time. I just want to go to the mistakes, common mistakes, and how to fix them. Before defining the goal, right? Like before buying, oh, I just want to buy insurance because I want to protect myself. I came into rush. I go with your story, Rico. I understand. I just had my husband's wife just passed away, and I don't want to leave that problem to my kids. So let's just buy it. I'll buy, can you give me $200,000 coverage? And I'm like, no. Wait a second. We need to define the problem first, and then we'll find the proper solution, right? Not putting the horses before the carriage, pretty much, so to speak. Numbers 2, insuring the wrong person, right? Like that's huge. You have to understand which person is first as well into your plans, right? Then the number 3 is wrong owner beneficiaries. Where does the money land? So you can make the beneficiary your spouse, your kids, your corporation, your charity, whoever you want it to be. Speaking of charity, if you buy insurance for your charity and you die and you pay it off, then you save on taxes, because there is an amount that you can save on taxes again. But anyways, that was just a little blurb. Never reviewing. Land values rise, debt changes. So never leave it sticking and stale. Don't think that once you have a plan in place, that's it. It's like shooting for the moon and you'll never have to adjust once. Let me tell you, those astronauts, if they ever got there, they had to adjust a couple of times. So, same thing with your policy, adjust, 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 and you hopefully get to target. Not guaranteed. Um, Advisors not aligned. When the insurance advisor and CPA are in line, the plan can look good and still fail in execution. This was huge. We talked about it in our will and estates planning and all that. But so I had 7 questions to ask your CPA or lawyers or anything like that, so that you can set up the proper plans. But I don't have the time right now. I want to thank you for watching this show or listening to it in your car or anything like that. Please don't be shy. Ask questions. I'm here. My name is Rico. I'm with Farmers in Finance. If we don't get together and start talking about these issues, nobody will. It won't come up. And I hope you enjoy the show, and I hope to see you next time. Same time, same place, 8 to 9 on Wednesdays. The revolution will start with you. So, a little burp. Again, this show was for educational purposes only. I am a financial advisor, aka not official. I don't have any certifications. I help people structure their finances through life insurance, investment, and debt management. So if you ever need a help, please reach out at ricardo@ricardomanazza.com or rico@farmersinfinance.com. If you own a farm, I'd love to help you. Please, thank you for watching again. Subscribe to the channel if you haven't done so. If you're on LinkedIn, stay tuned. Every week we put out a show. If you're on Facebook, well, thanks for watching on Facebook as well. We were live. Thank you so much. Appreciated your time. Have a great week ahead. Bye.